Hello everyone, welcome back to this week's Technical Insights. Last Friday, major US indices suffered a big pullback as the latest economic data sparked concerns among investors over a slowing economy and sticky inflation, leading market to search for safer assets. US Consumer Sentiment Index fell to 64.7 in February, a decline of nearly 10% and a steeper than expected drop as US consumers raised concern about higher inflation ahead of possible new tariffs. The 5-year inflation outlook in the survey was also at 3.5%, the highest since 1995. And on top of that, existing home sales in US fell more than expected last month to 4.08 million units, and the US service PMI data also dropped into contraction territory for February. Losses then intensified into Friday's close, as you can see over here, as investors feared that staying long in the weekend could bring another round of tariffs from Donald Trump. At the close of Friday, the Dow Jones Index lost 748 points or 1.69% to finish at 43,428 points. This decline is the worst year-to-date drop, bringing its two-day losses to about 1,200 points over here. The S&P 500 also fell 104 points on Friday or 1.71% to close at 6,013 points, marking its second negative session after the index closed at a record high last Wednesday. The Nasdaq Composite also dropped 438 points or 2.2% and was the worst performer among the three US indices, ending at 19,524 points. Walmart shares in the US also fell 2.5% on Friday after a 6.5% drop on Thursday, marking a second day of losses after the company issued a weaker than expected forecast, and that soured the outlook for consumer and the US economy as well. For the week, the Dow and the Nasdaq Composite Index each lost 2.51% each, and the S&P 500 lost 1.66%. Facebook parent Meta also snapped a 20-session winning streak, losing 7% for the trading week as well. 10-year US Treasury yield then decreased 6.6 basis points to 4.43% on Friday, on track to fall for a fourth straight week, while the 2-year rate also lost 6.4 basis points to 4.2%. Investors will refocus their attention this week to the earnings of Home Depot, Nvidia, Salesforce, and Warren Buffett Berkshire Hathaway. While it is a sea of red in the US, it was a contrasting in Asia last week. Hong Kong stocks soared nearly 4% to close the week on a high note on the back of substantial boost in Alibaba Group's profit amid the stronger tech earnings. The Hong Kong Hang Seng Index surged 3.99% or about 900 points to end Friday's session at 23,477 points, securing its sixth weekly gain and the longest winning streak in a year. The Hang Seng Tech Index also added 6.53% or 359 points to 5,859 points, hitting a 3-year high, continuing the optimism over China AI sector growth. Chinese tech stocks also led the rally as a buying frenzy ensued following the December 2024 quarter results of Alibaba, China's biggest online retailer. Alibaba earnings has always been seen as a bellwether for consumer spending in the world's most populous country, and shares of Alibaba on Friday surged 15% to its highest since late 2021, after the e-commerce giant said it logged a 239% year-on-year rise in quarterly attributed net income to 48.9 billion yuan, beating market estimates. Lenovo also jumped 15% to a decade high, while Xiaomi climbed 4.8% to a new fresh peak. Additionally, Bilibili, the Chinese video streaming platform, posted an attributed profit of 90 million yuan in Q4, rebounding from an attributed loss of 1.3 billion yuan just a year ago, and shares of the video streaming platform closed nearly 17% higher on Friday as well. For the trading week, the Hang Seng Index rose 3.79%, while the Hang Seng Tech Index jumped a massive 6%. Investors are betting that China President Xi Jinping's rare meeting with the country's biggest business leader, including Alibaba founder Jack Ma, could signal a policy U-turn following years of crackdown on the tech sector, and that really fueled Hong Kong's rally. Back to Singapore, our benchmark index also managed to close higher last Friday on the news that MAS will launch a new 5 billion program that will involve putting money with fund managers focusing on investing in Singapore stocks. SIAS finished higher by just 2 points or 0.06% to close at 3,929 points. SIAS also hit a new all-time high on Wednesday, closing at 3,949 points. For the trading week, our benchmark index are up about 52 points or 1.35%, a commendable performance, bringing the year-to-date total return to 3.68%. In contrast, the S3 index gave back about 0.9% in total return after the 10-year US Treasury yield spent most of the week above the 4.5% mark, with no change to the consensus for only 125 basis point cut in the remainder of 2025. The latest FOMC minutes also revealed concerns on the impact of tariffs on US inflation. A higher US dollar may offset some of Donald Trump's tariffs-induced inflation, and higher level of USD or inflation will threaten fund flows from Asia back to the US. Our three local banks also managed to average a 2.2% gain last week. Last Wednesday, UOB reported a record net profit of 6 billion Sing dollars for its FY24 ending December 31st. Over the past trading week, Bloomberg 12-month estimated target price for UOB also increased from $40.63 to $42.06. UOB CEO Mr. Wee also acquired 200,000 shares at an average price of $38.65 per share on February 19. Mr. Wee highlighted that the record net profit was driven by strong fee, trading, and investment income. He added that the group's long-term investment in regional platforms are paying off, and he expects continued revenue growth this year. UOB also announced a significant capital distribution strategy, which includes a new share buyback program worth 2 billion Sing dollars that will involve acquiring shares from the open market and subsequently cancelling them. This program is part of a larger 3 billion package aimed at rewarding shareholders and optimizing the bank's capital position. So for this week's technical analysis, let's look at UOB Bank. Last Friday, UOB share price closed lower by 5 cents or 0.13% to finish at $38.38. But for the week, the UOB share price rose about 32 cents or 0.84% for a second consecutive winning week after previous week 1.82% gain before the result. From the chart, we noted that UOB share price has been on a very strong uptrend since the beginning of 2024, benefiting from the elevated interest rates and enhancing their net interest margin. UOB share price previous high was seen on the 9th of January over here, where it hit a high of $37.94. And we have breached that level last week after the result was announced, forming a new all-time high at the $39.20 level last Wednesday. Looking at possible support level for UOB, the previous high on 9th of January at $37.94 could have a change in polarity and become a new support level going forward, with the 20-day moving average, which is the white line that you see here, now at $37.67. The next support level would then be the 50-day moving average, with the blue line that you see here, now at the $37.14 level, which also coincides with last November high at $37.08. With UOB share price now at its all-time high, the next resistance level would be the upper bound of the Bollinger Band, now at $38.78, and above that would be the psychological level of the $40 handle. Looking at the indicators, the MACD is showing signs that the uptrend momentum has been slowing at least in the past 3 trading sessions. But the reading is still positive, so the uptrend that we have been observing since last year is still very much intact. The latest RSI reading at 64 points is also 14 points above the 50-point neutral mark, indicating that the uptrend is still healthy and positive momentum is still present. This was despite touching the 70-point overbought mark last Wednesday. With both the MACD and the RSI indicating that UOB uptrend momentum is still intact, the 20 days and the 50 days moving average at $37.67 and the $37.14 level could be good levels for investors to further accumulate on UOB shares. Based on 19 analysts covering UOB in the past 3 months, 12 of them had a strong buy call and 5 of them also had a buy call, with 2 having a hold call. There were no sell recommendations, and the 12-month average target price is $41.72, with the maximum estimate at $46 and a minimum estimate of $36.40. So these are the updates that I have for you this week. If you do find the information useful, do remember to like, share, and subscribe to stay updated with the latest market movements. And I'll see you again next week in the next Technical Insight.